In this video, we will see some important adjustments of final accounts. That adjustments will be there in your exams. So first adjustment is there for closing stock. Okay. So closing stock is always recorded at cost or market price, whichever is lower. So whatever amount is less, that amount you have to record in the books of accounts. So let's check the two effects of this closing stock. First is credit side of trading account, and the second is shown on asset side of balance sheet. Okay. Then next adjustment will be there, depreciation. For this depreciation adjustment, like this, the plant and machinery will be depreciated at the rate 15% per annum. Okay. So this 15% per annum, you have to calculate that depreciation at the rate 15% on opening plus additions. Okay. Or sometimes no additions, only on opening balance you have to calculate depreciation at the given rate. What will be the effects? See, first will be debit side of profit and loss account being loss, and the second effect will be deducted from particular assets on asset side of balance sheet. Then the next adjustment will be outstanding or unpaid expenses, means any kind of expense is given to you, and like salary, rent, and it is given in the adjustment key salary is outstanding of rupees 1000. So you have to give, that's outstanding means what? If for a current year you have not paid that salary, so profit and loss account, what it records? It records only that current year's transactions. Okay, so that salary is outstanding. That means that is related with the current year only. So we have to add that salary to the particular expense on trading or profit and loss account, whatever the item of expenditure is. If it is direct, then you have to add that in trading account. If it is of indirect nature, then you will add it in profit and loss account. Okay, in the given expenditure. Then the second effect will be, it's your liability, so shown on liability side of balance sheet. Then the next expense is prepaid expense. Prepaid means paid in advance. Okay, so prepaid means for next year or for future year you have paid that expenses right now, but our profit and loss records, profit and loss account records only current year's transaction. So this next year's expenses we will deduct. Okay, so less from that particular expense on trading or profit and loss account. And the second effect is shown on asset side of the balance sheet. Okay, then the most every time asked item is there, that is bad dates. Okay, so bad dates means the debts or the amount which is irrecoverable from debtors. Okay, so first effect you have to give debit side of profit and loss account, new RDD plus bad dates you have to record, and the second effect will be deducted from sundry debtors on asset side. Okay, the next is RDD, reserve for doubtful debts. And remember, bad debts are bad, means that is the actual money lost or money irrecovered from the debtor. Okay, and RDD is the reserve or provision for doubtful debts, means there are chances of recovery of that debts also, but that are the only chances. So we are providing for that also. So first effect will be given on debit side of profit and loss account, and again your sundry debtors balance is reduced by that much amount. Sometimes in question amount is given for already, or sometimes you have to calculate on the basis of some percentage given for RDD. Okay, then that RDD will be calculated like sundry debtors less bad dates, and whatever amount is remaining after deducting that bad dates, on that amount you have to calculate that RDD, that is reserve for doubtful debts. The next is provision for discount on debtors. See, discount on debtors means that discount is given always to good debtors, right? So after deducting RDD, whatever amount is there, you have to calculate a discount on debtors on that amount. Okay, so first effect, debit side of profit and loss account, and the second effect will be deducted from sundry debtors on asset side of balance sheet. Then the next adjustment will be goods taken by proprietor for personal use. See, personal use means drawings. So credit side of trading or deducted from purchases account as goods are taken. And the second effect, your capital gets reduced by that much amount. Okay. So deducted from capital on liability side. Now the next item is interest on capital. Okay. So remember, interest on capital means what? Whatever capital is invested by the proprietor into the business, on that amount, business is paying interest to the proprietor. Okay. So it is an expenditure of business. So debit side of profit and loss account, and it is the income of that proprietor. So added to capital, liability side of balance sheet. And the reverse situation will be there for interest on drawings as compared to interest on capital. Okay. So interest on drawings means what? Whatever amount is withdrawn by the proprietor for his personal use, on that amount, interest is charged. Okay, means the proprietor have to pay and the business will earn that income. So credit side of profit and loss account, first effect, and second effect will be added to drawings or less from capital. So these are the very most important adjustments in final accounts that you should know, and you should must know the effects of these transactions. Yes. After recording these all adjustments, after giving two effects for all the adjustments, you have to tally the two accounts and one balance sheet. How? So first you have to balance trading account. Whatever balance is there, credit side minus debit side. If credit side is greater, there is gross profit. That gross profit is carried down to profit and loss account. Again, you have to take the total, compare whatever higher amount is there. From that, if income side is greater, deduct expenses from that. Remaining amount, that is balancing figure, will be your net profit. That net profit is transferred to capital account, means added in capital account, and whatever capital balance is there is calculated at the outer column, and you just have to take the balance sheet total. That's it. Okay. Hope you have understood all the important adjustments. Thank you.